I'm going to try to get into one of the most underappreciated investment stories of the last couple of years, the collision between artificial intelligence and the natural world. So most conversations about AI and the environment focus on the dangers. So high energy use, massive water consumption for data centers, and those concerns are real. But today I want to flip the script because AI may actually be one of our most powerful tools for protecting nature and even helping solve some of the problems that it contributes to. So the question I really want to answer is, what is AI doing in nature tech right now? Where is it going? And why does the investment opportunity feel different in 2026 than it did 2 or 3 years ago? So let me start by what's actually happening on the ground. So today, AI is being used to predict wildfires before they spread, to quantify the outcomes of reforestation projects, to understand the impacts of floods in near real time, and to detect illegal logging through things like acoustic sensors, listening for sounds in the forest of chainsaws. And these aren't pilot projects or research papers. These are operating businesses, and they're growing fast. But here's what I find really interesting. The most powerful nature tech systems aren't using a single tool. They are stacking them. eDNA analysis combined with satellite imagery, combined with acoustic sensors, combined with AI models trained on ecological data. And when you stack all these layers together, you don't just get better data, you get entirely unique data sets that competitors cannot replicate. That's a data moat in its truest sense of the word. This stacking is what also enables hyper-granular monitoring at scale, which is the core infrastructure for the emerging market structures we'll talk about later. So that's today. Let me walk you through 4 emerging applications that will become major market categories over the next 3 to 5 years. Investors should be paying close attention to all of these. So first, biodiversity and water credits. Think of these as the nature equivalent to carbon credits, but tied to measurable biodiversity or water outcomes. The carbon market was estimated at over 900 billion at 2023. If biodiversity credits come standardized at anything like that scale, you're looking at an enormous asset class. And the critical enabler? AI-powered measurement. You can't have a credit market without robust, trusted verification, and that's exactly what AI is starting to provide. Second, hyper-accurate nature monitoring. So we're moving beyond just identifying whether species is present or absent in an area. New AI systems are being developed to assess animal behavior, ecosystem health, and ecological interactions. This is significant because it means conservation decisions can be based on the functional condition of an ecosystem rather than just a species checklist. So for investors in conservation finance, this is the difference between rough estimates and investable data. Third, nature digital twins. This one is early, but it's exciting. So advances in data capture, modeling, and our underlying understanding of ecosystems are enabling the creation of digital twins of natural systems. Essentially, simulations of rivers, forests, or ocean zones that let you model what happens if you restore this wetland or if that reef degrades further. So Plymouth Marine Laboratory in the UK has already built the first digital twin of an ocean environment using satellite data and autonomous marine robots. And as AI improves, these models will become much more sophisticated and much more useful for restoration planning and investment decisions. So number 4, this one is a big one. Large nature models. So you've heard of large language models like ChatGPT, Claude, Gemini. Now imagine the equivalent but trained on nature data. Species records, ecological surveys, environmental sensor data, and companies like Dataland are already working on this, partnering with institutions like the UK's Natural History Museum, the Smithsonian in the US. And the vision is an operating system for nature tech, a foundational model that other organizations can build on top of, the same way that software companies build on top of cloud infrastructure. So when this matures, it will dramatically lower the barrier for new entrants to build nature tech applications. And whoever builds the dominant large nature model first will own a structural advantage that compounds over time. So the technology is maturing, but technology alone doesn't make a market. You need demand. And right now, demand is being created from multiple directions simultaneously, which is part of what makes this moment feel genuinely different. The first driver is regulation. So regulations like the EU's Corporate Sustainability Reporting Directive, the CSRD, and the emerging TNFD framework for nature-related financial disclosures. These are softly to strongly forcing companies and financial institutions to actually quantify their nature impact and dependencies. So not just estimate, not report qualitatively, quantify. That creates enormous demand for high integrity nature data, automated monitoring and verification systems, supply chain risk analysis, and biodiversity impact analysis. And we're already seeing capital flow in response. So in January 2025, Nature Metrics, an eDNA and AI-powered ecosystem intelligence company, raised $25 million specifically to scale its offering in response to these growing regulatory needs. The second driver is corporate risk. The link between supply chain disruption and nature loss is becoming ever harder to ignore. So droughts disrupting agriculture, wildfire risk increasing in monoculture forests, coastal hotel chains exposed to flooding as coral reefs degrade, for example. And that includes reputational damage from deforestation-linked supply chains. So Nestlé's ongoing palm oil controversy being a well-known example of that. Nature risk is moving from the CSRD department to the boardroom. And when it comes to an operational and reputational necessity, companies will pay for the tools that help them manage it. The third driver is the financial sector itself. So green bonds, blue bonds, carbon markets, biodiversity credits, resiliency insurance, all of these financial products rely on AI-powered measurement and forecasting. Without credible data infrastructure, these markets cannot scale. And scaling them is where the multi-billion-dollar opportunity sits. Let me talk about why the timing matters and why the window for early differentiation is shorter than people think. So the democratization of AI is a double-edged sword. On one hand, it dramatically lowers the cost, time, and expertise needed to build nature tech applications that small teams can build quickly and test quickly. But on the other hand, it means that competitors can replicate products fast. If your moat is a generic AI model, you're exposed. In nature tech, defensibility will come from what cannot easily be copied. Proprietary ecological data sets, on-the-ground partnerships with conservation organizations or governments, deep domain expertise, and crucially, the data flywheel. The data flywheel is where AI models are trained on real-world user feedback. And the value compounds over time, like interest on a deposit. Early applications that attract users will build a compounding advantage. Latecomers will face a steeper hill. This creates very real incentive to move now. For investors, there are 3 specific first mover advantages worth highlighting. 1, early access to undervalued natural assets. When biodiversity credits become standardized, biodiverse ecosystems will hold significantly more value than they do today. Investors who position themselves in those early assets before the market prices them capture the upside. 2, data moats. Think eDNA libraries, acoustic archives, long-term ecological monitoring records. These data sets are genuinely hard to replicate, and the organizations that own them will have a structural advantage that persists. 3, influence over market rules. The standards being set today for biodiversity credits, water credits, and ecosystem resiliency metrics will likely become the norms of tomorrow. So being present at the table now isn't just good for returns, it de-risks a portfolio significantly in the long run. So why isn't more money flowing in? In 2025, AI startups globally raised over $250 billion, while nature tech raised around $2.1 billion. That's less than 1% of global AI venture capital. Now, nature tech is a sector that is growing. Funding rose 26% between 2023 and 2024, and there are really encouraging signals Investors like Superorganism recently raised 25 million, focused on biodiversity startups. So there's real demand from LPs in this space. But the gap between what's needed and what's being funded remains enormous. UNEP estimates that around 7.3 trillion in public and private investment currently flows into activities that harm nature, against just 220 billion invested in solutions which actively help restore or protect nature. So that's about $30 in damaging activities versus just $1 to protect and restore. Philanthropic funding coming through initiatives like the Bezos Earth Fund is valuable for early innovation. So 30 million was announced in October 2025, but philanthropy can't scale markets. That requires traditional VC funding and then institutional capital to track the commercialization trajectory and step in. We also want to be honest about risk. AI valuations have been elevated, and the Bank of England's Financial Policy Committee has flagged potential correction risks in the AI-focused tech market. And AI itself is not inherently sustainable. Remember the high energy, high water use, and investors should scrutinize the full environmental footprint of any nature tech business that they consider. So I'll close by taking a step back. Nature is under unprecedented pressure. Extinction rates are rising, ecosystems are approaching tipping points, and over half of global GDP depends on healthy natural ecosystems. We could argue all of GDP is based on healthy ecosystems because the economy exists within nature. And nature-based solutions can deliver about 35% of climate mitigations we need by 2030. It isn't nature tech versus climate tech. It's two industries that are incredibly complementary. And for the first time, we have got technology that is powerful enough to value nature accurately, continuously, and at scale. AI is that technology. The regulatory environment is tightening, corporate awareness of nature risk is growing, new financial markets around nature are forming. The combination of the world's fastest growing technology class and the world's most essential asset class is sitting right in front of us. This is not only an impact opportunity, it is a strategic investment opportunity. And if you're an investor in exploring the space, or a founder, scientist, institution working at this intersection of AI and nature, we would love to connect. So at Float, we are tracking the trends, building the network, and mapping the deal flow. So find us on our website or reach out directly.